Now on to our first session of the day, where I have the personal pleasure of taking you through the results of our latest to programmatic survey. Okay. As I said, my name is Nick Welch, and I'm the head of programmatic for EMEA and also at Integral Ad Science, and also the chair of IB Europe's Programmatic Trading Committee. And it is a real pleasure to be here with you today as we reveal the latest attitudes to programmatic and advertising study results. And those results can be downloaded if you want to look at them in depth from IB Europe's website. So, according to the latest IB Europe AdX Benchmark 2021 study, which was released in June of this year, the European digital ad market is now valued at 92 billion euros and is now programmatic first, with 50% of all non-social display spend now being transacted programmatically, which is a whopping 33% increase in programmatic investment from 2020. But what we want to understand is what's driving that investment, and also what are the key barriers we need to overcome to ensure that we see continued growth across the programmatic space. So in this session, I'll share some of the top findings from the Attitudes to Programmatic Advertising Research, which is now the annual benchmark of the drivers and barriers to programmatic investment. Study will also dive into the operational models and strategies for programmatic trading, the measurement of programmatic campaigns, and the future of programmatic advertising investment to see how that spend is translated in market. Okay, so let's start with a little bit of context. In 2021, the digital advertising market, as I just mentioned, in Europe grew by 20.5% to a value of 92 billion euros. So this now equates to 59% digital share of all media advertising, compared to 19% back in 2009. So if we then look at that programmatic share, programmatic is now outperforming IO-based display ads, and the programmatic display is now worth around 13 billion euros. So if we then go a step further, what is a 50% share of the total display market driven by? Publisher approach and concentration of sell side influencing programmatic adoption between markets. It's a fast ramp up of second mover markets, especially in CEE, but there's also been a move to private marketplaces as open market share seems to be in decline. So in order to understand the drivers and barriers in programmatic a bit more, IAB Europe has been undertaking an annual Attitudes to Programmatic study for the past 8 years. And those are the results that we're going to dive into now. As I mentioned, the study has become an industry benchmark to show how programmatic advertising attitudes, adoption, and strategies are evolving. And the survey itself attracted respondents who commanded significant volumes of advertising supply and demand. The responses came from advertisers, agencies, publishers, and ad tech vendors from 29 markets, and the respondents all held both pan-European and global remits. Really important and influencing and diverse group of stakeholders. And what I really want to do on the next slide is just talk about what the biggest observations were. So media cost efficiencies are still key to programmatic. The cost of data and tech is paradoxically seen as a barrier to investment. And also, and this is quite telling, there's been a shift in the type of data being used for audience targeting, which gave some surprises, and we'll talk a little bit more about that later. And interestingly, after seeing in-housing being a priority in previous studies, we're now seeing a shift away from in-housing to more dynamic approaches, and we'll explore that a little bit too with our panel after this presentation. And no surprises, TV still seems to be the flavor of the month, and there's positive growth outlook for that emerging channel. So let's jump into these in a little bit more detail, and we'll look at the programmatic investment drivers specifically. So we asked our respondents, what are the key drivers for your company to consider investing in or increasing its programmatic trading investment? More than 25% of advertising agencies ranked media cost efficiencies as the most important driver for programmatic investment. And interestingly, granularity of controls and transparency of reporting were also important to programmatic decision makers on the buy side at 22% for both advertisers and agencies. So we can surmise that nearly 50% of respondents highlighted media cost efficiencies and control and transparency as the major interest areas for investment, increasing investment in programmatic. Okay, so that's what's driving the investment. What's actually driving the barriers? So if we can jump through to the next slide. So looking at the barriers to programmatic adoption, it's interesting to see that whilst the efficiencies are a key driver, there are also costs can also be a barrier to investment. And when we talk about cost, it's in the context of technology costs and data costs. And that was ranked as the first or second priority by 40% of advertisers, 34% of agencies, and 39% of publishers. So for agencies, hiring and training staff is a key concern, as it was ranked as the #1 barrier by 37% of agencies. So hiring talent is likely further heightened by the complexity of trading, reporting, and analytics platforms, which require significant training to be productive, which leads to high levels of investment and retention of teams to operate efficiently. Okay, so jumping into a view of the operation models. And as I mentioned before, in-housing was seen in the previous study as an area that advertisers wanted to investment in. But if we now move on to this concept of in-housing, we are seeing a very interesting picture. Last year, as I said, 50% of advertisers said they had an in-house model. And this seems to have dropped to 16% in 2020. So there seems to be more of a hybrid or dynamic approach with advertisers, tapping into a range of methods, such as maybe outsourcing to a DSP or independent trading desks. And this is perhaps being driven by the struggle to source the correct talent, paving the way for consultancies to play a more vital role in the process. I think it also potentially points to the fact that in-housing was seen as a way to drive additional efficiencies, but actually the complexity around in-housing may have been what drove advertisers to second think whether or not that's the approach they take. And we'll dive into some more of the reasons why a more dynamic approach might be being adopted in the panel session shortly. So audience and targeting, and there are some surprises here. We've looked at the key drivers, barriers to investment. So now let's look at the data and what the buy side is leveraging. And we can see a significant drop in the number of advertisers and agencies using first-party data between 2021 and 2022. And alongside this, we've seen a drop in the use of third-party data and an increase in second-party data. And just as a way of giving a definition, so second-party data is actually a publisher's first-party data, which is then being made available to the buy side to buy. So around 2/3 of advertisers, 63%, are now using second-party data compared to 40% in 2021. So there is a gap between the theoretical value of first-party data and its practical availability. So depending on the vertical, many brands are at least one step removed from the consumer, so probably have less first-party data as was maybe first thought or commonly perceived. And if data is available in principle, it's hardly available in readily refined and usable form. If we also consider the industry is preparing for a cookieless world, advertisers and agencies could also be looking to diversify their audience data and tap into sources. If we jump through to the next slide. So First-party data is still important, but it would seem that contextual and curated marketplaces are also seen as key to identifying new audiences. And alongside this, we see a shift in priority with less importance being placed on ID solutions, suggesting concerns around privacy compliance or a fragmentation of solutions, seeing the decision making. So when we look further into the solutions that are currently being used to find new audiences, advertisers are most likely to turn to curated marketplaces. And given the impact of data protection regulations and browser cookie controls, approximately 50% of all stakeholders groups plan to leverage first-party data. This emergence of curated marketplaces as new sources of audiences, along with first-party data, continues to suggest that confidence in the third-party cookie is declining. So whilst this is interesting, that there is a big decline in opportunities from ID solutions, could be due to the relevant infancy of solutions in the market and proliferation of alternatives. So what about the future of programmatic investment? The majority of stakeholders are expecting to see an increase. So further, around 17% of surveyed advertisers, 12% of agencies and 22% of publishers believe that their programmatic online display revenue will decrease to a certain extent. But I think this is really quite encouraging that we're going to continue to see more growth. And again, it's probably likely down to the cost efficiency investment drivers, as we highlighted at the top of the presentation. Finally, it's also important to look at the channels in which this increased investment is going. And it's no surprise that connected TV is still taking the largest slice of the programmatic pie, with over 54% of all stakeholders saw this as the biggest growth area in programmatic in 2022. This was closely followed by voice, where agencies, advertisers and publishers saw its potential, with 32% of advertisers, 28% of agencies and 27% of publishers stating that this channel will be the biggest programmatic growth area this year. For ad tech vendors as well, audio was also one to look out for. Okay, so that takes us to the end of the overview of the presentation.